Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. Today I'm going to talk about the stock Nio, ticker symbol NIO, currently priced at $32.51 per share, up 15% today. Past year, down 30%. Ever since it IPO'd, it's up 442%. So a lot of volatility. As you can see, it peaked at around early 2021, up 932%, but now it's down to 442% increase. So what Nio does, it's manufactures electric vehicles, and they have some products coming down the pipeline, including the supercar as well as the SUV, as well as home charging and some other services. So they're trying to be like the Tesla. And market cap is $53 billion. No PE ratio because they're not profitable, and no dividend yield. So they're reinvesting all their profits back into growth. So out of the 24 analyst ratings, 88% give it a buy, 8% give it a hold, and 4% give it a sell. Taking a look at the details of performance, you can see in terms of annual trends of the financials ever since 2018, extremely unprofitable. They're operating at a loss. You can see year over year, 2018 down $23 billion, 2019 down $11 billion, 2020 down $5 billion. So you can see in terms of trends, they're increasing their revenue, but also their earnings continue to be, so the margin continues to increase, which is good. Hopefully they become like Tesla and become profitable, a sustainable profit. Taking a look at the earnings, you can see that every quarter it's been missing their estimates, other than Q2 2021. Hopefully they can meet their estimates. And in terms of the ratings, you can see analyst targets currently it's at $32.50. Average price target is $57.77, and on the high end, $86. Taking a look at the actual earnings report from Q3, some of the highlights. So in terms of vehicle sales, you can see that 102% year over year in terms of their sales. Vehicle margin, 18%. So it's good to see that they do have a margin, and it's increased since last year of 2020. Their total revenues up 116% year over year. Gross profit, this is increase of 26%, or no, 240%. So you can see that their revenue and profits increasing, but they are still operating at a loss. If you look at it holistically, it's a business and net loss. So this is a very high growth, high risk company, but potential upside is there. Hopefully they become the next Tesla. And in terms of their cash and cash equivalents, which is something I like to see, based on it during the bad times, if they have more cash on hand, then they can sustain their business during tough times. So you can see, taking a look at the overall sales, vehicle sales increased, vehicle margin, that also slightly decreased, but it's good to see that they still do have a margin for the vehicle. Total revenues increased quarter over quarter. And taking a look at these three, which are something I'm more interested in, their gross margin, loss from operations. You can see that overall their loss is pretty big, even though they increased their revenue. So all in all, I think Nio is a very high growth stock, high risk, but potential upside is there. Hopefully become the next Tesla as the electric vehicle market continues to be increasing in demand and popularity. And personally, I don't have any stake in Nio and don't plan to open any positions, but I am tracking them and they are on my watch list, so I'll continue to provide updates as I hear more. That's all for this video. What are your thoughts on Nio? Comment down below. Remember to use my referral links below, and both of us get a free stock for Robinhood or $20 in personal capital. That's all for this video. See you in the next one.